Welcome back to Markets Today. It was yet another down day in the markets. A bad day if you were a bull. The big indices have lost 0.5%, but the mid-caps indexes have lost more than 1%. The bank Nifty was the biggest culprit, losing well over 2%. That's because the banks were also registering the losses in the bond and the currency market. Now, for some more expert opinion, Ajay Srivastava, CEO of Dimensions Consulting, attributes the sell-off in the market to both global and domestic factors. Hear him out as well the views of Nirmal Jain of IIFL, who says that the markets could see more FII buying activity sooner rather than later.
It's not just a sporadic reaction that a sell-off has happened. It's a culmination of several global factors, several local factors put together. So I think you can't just say it's a buy because the share price has gone down. There are always those blue chips which you wanted to own but did not own or did not buy, and you saw them rise up. So you may want to nibble maybe in next week or so. But if it's a buy on conviction, I think we are far away. I think we are, in fact, my view is, we are one step away from panic, but a mile away from, I think, a revival.
Still, it's a bull market, and if it corrects as steeply as it has done yesterday and maybe today or in the next few days, I would not be surprised if there are some long-only FIs who come back to buy because they'll find valuations attractive. Whatever these things have happened about MAT or reforms that we are talking about, I don't think they've changed the fundamental story about India. It's just in that phase. We are right now, yesterday we saw more than 700-point fall. Today we are staring at 200-point falls, about 1,000 points. In a matter of just less than 2 trading sessions. So obviously this is the time when everybody would feel and talk pessimistic. But I think it's more like a correction, and I would not worry too much from a medium-term perspective.
That's an optimistic view from Nirmal Jain. All right, from fundamental perspective, let's move to technicals now. Sudarshan Sakhani is joining in. Sudarshan, more volatility on the street, another negative close. What did you make of trade?
Good evening. Markets continue to be in the dumps. The downtrend is clear and consistent, and there's a lot of intraday volatility. Intraday volatility is the reason I think most traders should step away from this market. You cannot make money when the Nifty goes up 100 points up and then comes down 100 points in a matter of hours. It is not a good environment. So professional traders should be having short positions or may like to have short positions. Your stop for the short positions is 8,200. Most retail and novice traders should simply step aside and let volatility come down.
Okay.
The view on the Nifty remains mildly bearish. The correction is continuing. What could have been a relief rally fizzled out very fast. The market has resumed its downward move. We have a stop loss, which is the only way we can say that this is a threshold above which we will not maintain short positions. There are no targets on the downside immediately. On a, say, larger time frame, as we look over the next few months, it does appear that 8,000 will not hold, and the chances are we'll go towards 7,700 or 7,500.
Okay, well, I got a little scared, Darshan, when you said there are no targets, but okay, we can perhaps still live with 7,700. What about a stock idea for tomorrow?
For tomorrow, I would suggest bringing a little cheer into your trading plans and consider buying. ID stocks had a good day today. TCS and HCL Tech are both consolidating for the last many days, so they have not been falling. For tomorrow, I would suggest consider buying HCL Tech. After that consolidation, the stock has broken on the upside today. Now, it is possible that this upside breakout may be false, and of course, it may be the real thing. So we just keep a stop loss to protect us from any false breakouts and consider going long in HCL Tech. If it is a genuine breakout, we have a reasonable possibility of an upside.
Okay, all right, Sudarshan, thanks so much for that. Let's see if we can actually pick up tomorrow. Well, a number of stocks are buzzing around in the market today. Let's go across to Mangalam Malu for a quick wrap-up of all the action. Mangalam.
Well, thanks a lot for that. And a volatile day for the markets. A whole host of stocks were in focus today. We start with the IT pack. All of them gained in trade today on the back of rupee depreciation. Remember, the rupee depreciated by nearly 1% against the dollar today. Also, Bharat Forge lost about 2.5% in trade today on the back of a Nomura report, which said that April truck orders in North America are down 10% year on year. Remember, North America forms about 37% of the company's revenue. MEP Infra also lost about 14% in trade. Total 18% since the time it listed yesterday. Credit Suisse sold about 16.5 lakh shares or 1% stake in the company at 62.7 rupees per share. Jet Airways and SpiceJet also lost in trade today on the back of increasing crude prices. Additionally, Jet Airways was also in focus as the Supreme Court refuses to intervene in the seat-sharing agreement between Jet and Etihad in India and UAE. Amara Raja gained in trade today as the company is looking to double current capacity from 11 million units per annum. In fact, it also gained in trade today on the back of being a new F&O entrant from May 29th. On the back of stocks that were reacting from earnings, Shivaru Entertainment rose about 6% in trade today as the consolidated net profit of that one came in higher by 82%. And KEC International also gained about 3% in trade today as they posted a total income growth of nearly 16%. The management tells CNBC TV18 that the robust performance in their core T&D business led to the improvement in financials this quarter. Ahead of earnings, Blue Dart, Titan and Talwalkar, all of them lost in trade today. From the results that came in today, we had Sensex, which lost about 5%, but margin expansion on that one was positive. The consolidated EBITDA was up nearly 14%, while the operating margins expanded by nearly 80 basis points to 18.8%. IIFL Holdings rose about 7% in trade today after they posted their numbers. Their net profit came in higher by 17% quarter on quarter, while the total income was also higher by 14% at 1,050 crores quarter on quarter. The management tells CNBC TV18 that growth in all business segments has improved their financials this quarter. And finally, Alembic Pharma, that one fell about 8% from the day's high after the results. Their total income down by 3.5% at 34 crores versus 35 crores year on year. With that, back to you.
Thanks a lot for that quick wrap of all the key stocks, Mangalam, and we wrap up this edition of Markets Today as well on that note. But before we end the show, we have some great news. CNBC TV 18 is the #1 channel, and now we have the numbers to prove it yet again. According to TAM data for the week 15 to 18, CNBC TV 18 is clearly the market leader with a 62% market share, which is more than twice 18 hours market share of 25%. We would like to thank you, all of you viewers, for giving us this opportunity and for your continued support.